Best banks to get a mortgage from in Canada, and what they're not telling you. You're about to make the biggest purchase of your life, and you've probably heard this 100 times. Just walk into your bank and ask for a mortgage. But that advice might cost you tens of thousands of dollars. Let's break down the best banks, lenders, and hidden traps that no one talks about when it comes to getting a mortgage in Canada. Hi, my name is Daniel Bozak. I'm the owner of Danlee Group here in Canada. With over 30 years of experience, and now with eXp Realty, I'm here to help people get a better understanding of the real estate market in Canada. Before we name names, let me tell you why this choice is so important. Most Canadians think getting pre-approved is the finish line. It's not. Choosing the right lender can change your monthly payments, your ability to break your mortgage without penalty, and your total interest paid over 25 years. We're talking about $50,000 to $100,000 in some cases. Types of lenders in Canada. You've got three main types of lenders. One, you've got big banks like RBC, TD, Scotiabank, BMO, and CIBC. Credit unions like Meridian and DUCA. And then you got money line lenders. Those are lenders that you can access through mortgage brokers only. Examples, you got First National, MPAC, and PMG. Most people walk into a big bank, but most money line lenders often offer lower rates at much flexible terms and very smaller penalties. Pros and cons of the big banks. Let's go through the big five. RBC, excellent for pre-approvals, often more flexible with self-employed income, but their rates are rarely the lowest. TD, great for new construction and builders deals, but some of their fixed rate mortgages come at a more costly monthly payment with penalties. Scotiabank, one of the only big banks to allow mortgage portability and good online access. Rates can be competitive through brokers, but not always if you go direct. BMO, often lenient with income qualifications, less competitive fixed rates. Watch out for their collateral mortgages, harder to switch later. CIBC, some of the best HELOC products, but sometimes higher difficult insurance premiums, depending on the structure. The verdict, banks are safe and familiar, but you're often paying for that comfort. What about credit unions? Credit unions are local, member-owned, and more flexible. Pros, more lenient on self-employment, easier approval on unique properties, sometimes better rates than banks. The cons, may not be available across all provinces, fewer digital tools, harder to port or transfer your mortgage. Top ones to look at in Ontario: Meridian, DUCA, Altera Savings. Why you should talk to a mortgage broker, even if you love your bank. A good broker will compare rates from 30+ lenders, explain fixed versus variable in plain English, help you structure a mortgage that fits your future, not just your present. Brokers get paid by the lender, not you. So you're not paying more unless you go with a private or B lender for a unique situation. And yes, brokers often have access to better rates than the same banks you'd walked into yourself. Best lenders in Canada? Well, here's what I'd recommend based on common buyer types. First-time buyers and stable incomes. I would go with a broker. Try First National or RMG through them. These lenders specialize in offering low rates with low friction. For self-employed or commission-based incomes, try Meridian or DUCA, more flexible with documentation. Look into Scotiabank, Step Products, or CIBC, Home Power Plan. Planning to move or break a mortgage in 3 to 5 years? Stay away from big banks' fixed rates. Try MCAP or Manulife, more flexibility, fewer penalties. What they're not telling you. Let's talk hidden traps. First, prepayment penalties. If you break a fixed rate mortgage early with a big bank, you could pay $10,000 to $30,000 in penalties. Moneyline lenders usually charge 3 months interest only, a huge difference. Collateral mortgages. Some banks register your mortgage differently, making it harder to switch later. Always ask, is this a standard or collateral charge? Discount rates aren't always better. A low rate can come with strings, limited prepayment options, high break fees, or restrictions on portability. Final thoughts, my honest opinion. Here's what I tell every client. Don't chase the bank you've been with since you were 8. Chase the mortgage product that matches your goals. And always compare options through a trusted mortgage broker, even if you plan to go to your own bank. This one choice could save you years off your mortgage and tens of thousands of dollars. If you want a full breakdown on which lender is best for you, based on your situation, comment mortgage below and I'll send you a free mortgage comparison guide. It's got side-by-side comparison rates, insights, and hidden penalty tips. And don't forget, like, subscribe, and hit the notification bell so you don't miss any of my future videos.